Good evening, traders. So it's just gone 10:30 on the 28th of January. Markets have just opened, so we're just going to have a quick look through the couple of the majors right now for potential trading opportunities later this week. First and foremost, going to start off with the dollar index, and we're just looking at this on the weekly chart, and we're just going to run back from the last cycle low up to the cycle high. We'll see that 1272 comes in this zone here, which I marked out between 89 and 8800. So this would be where I'm looking for a potential shift in sentiment from selling of US dollars to buying of US dollars. So for the counter trend traders, we'll be looking to see the dollar index take a little bit of a rally back up towards the 91 zone, which if we pull this in and we look left, look at previous structure, always leaves clues. So look at the cycle low here. What would expect to see happen now is a short-term rally in dollar strength. Based on technicals. Also, it's probably got a little shift from Donald Trump's comments last week regarding having a stronger dollar, basically putting a trade war where he's wanting manufacturing to come back to the US. He believes the dollar should be stronger and expects it to get stronger, and we saw a little rejection and the initial move. So what does this translate into other markets? So what we sent out to our Lifestyle Traders Club last week was a short on cable and a short on gold. We did actually put out the gold trade for you on YouTube, so everyone will have got to see that. So let's have a look at the euro to start with. We'll zoom out. This is the weekly chart. So what you should be able to see is you'll see two trend lines that we've got in here. I'll just remove them so you can see how they were drawn initially. So things that we take into account are tips of wicks and closing prices. So initial trend line, we draw from the tip of the wick at the highest point over here to tip of the wick on the second, which is, I'll highlight it in a second. Oops. Just through there. So you see the second one being here. Then it cuts through here, and we've seen right now that price has come into our trend line over here, and it's potentially rejecting it, which coincides with the dollar index rejecting its 88 to 89 zone and the fib 127 extension. So in terms of looking left, if we look left on this market as well, we've got fib from the last move, 38.2 rejection, which is drawn slightly unorthodox in the sense that I draw them back to front to most traders, and the reason for that is just I like my 127 to be a positive number, not a negative number. The rest of the fibs will all be the same, just inverted. So if we look at where current price is and where it's rejecting, what do we see on the charts? So we can see that this was effectively in a point of control where the buyers and sellers, supply and demand zones came in, and you'd argue that I don't like just drawing single horizontals. I always like to draw a zone just so I can get a feeling for that area. The markets are random, so you'll find that they don't just turn in an exact spot. So you see, even for example here, the market pushed right back down, then catapulted back up and retested off the level. We got rejection of the level, a rejection of the level, came back up, and you could probably draw this zone just slightly bigger somewhere in that region there, and this is your first higher low. So the market's come back up in to test this region here, coincides with support on the dollar index, resistance on the euro. Sentiment should be looking for the euro to drop back down, I think anywhere into this sort of 120 40 area, 120.50, where we should then potentially see a stall in the shorts on euro and maybe a catapult back to the long side. Failing that, it could drop a little bit lower into 117. So we'll always take our viewpoint on structure. So right now, the counter trend traders, they'll be looking for opportunities potentially to short euro. It has got the possibility to reject 126 before heading down. This isn't a chart that I feel is the cleanest at the minute, so this is why we're trading other markets. I'm going to just come in to cable, show you cable. This is a market we are currently trading, and I'll give you an example of why we came into it. So we've got a very clear tip of the wick, and rejection of the tip of the wick here, same trend line. The market broke out of this, you could call it extended channel. If you move this down, you'll see that there is the channel, then move it out a little bit, and this is just an extension. So this is the extremes. The market broke out, and just recently the market has been in one directional move on cable to the upside. So if we drop down to the daily, you'll see in a little bit more detail what that's actually happened. So I'm just going to zoom in. So we had big bullish momentum candle, we had the market run up, sell off from the trend line, then we've had another inside candle, shooting star, whatever formation you want to call it, but you can see that buyers tried to push the market up, failed, buyers tried to push the market up, failed. You've got this very steep ascending trend line, which in all honesty, it's very rare a market can hold a trend line as steep as that for a long period of time. So I would expect to see some sort of correction, and this is how we basically got into the market with an aggressive move. So if we drop down to the hourly, what you'll see is the market came up, failed high, double top, broke back down towards the trend line, and this is where we entered the market here. So this was our trade that we called out in the Lifestyle Traders Club, and there was two ways of trading it. One was as a double top with initial targets down at 140 and second targets all the way down 136. So that's your initial one. Now the next way you could have entered it, depending on your schedules at work and daily schedule, would be price action trade, so something like this, or the alternative would be taking a CTL trade, wait for a close below somewhere here, and you'd still get the same pricing point as an entry, and similar place for stops. Conservative traders could still put their stops above the high, reduce that risk in being caught out by crazy spikes that we're seeing in the market at the present. So that's cable. This is one of the trades we did take. Finally, we're going to look at dollar yen. So I'm just going to jump out to the weekly chart again. So let's just remove this. So I've got analysis on from last week. I'm just going to get rid of it all so you can see what we were looking at and make it a little bit more clear for you all. So okay, let's just zoom right the way out. So for a long period of time now, you'll see dollar yen has been went one directional, and then since early part of 2015 we've been sold off, and then you'll see that it's been coming into this sort of symmetrical triangle, and then over the last year what we've seen is a consolidation between sort of 114 and 108. So this zone in here is a pivotal zone in terms of where we expect the market to have a correction. Now when you coincide this support with the dollar index's support, what we'll be looking for is a push up towards that 114 and at least to this trend line first of all, and then potentially onto here, okay, before we could then potentially see the next move down. So trading opportunities, we're looking for longs in dollar yen. What that will relate to in terms of how to get in, well, obviously you'll stick to your rules. Some of our traders, we had limit orders at 108.50 and stops underneath structure. Another alternative method will be looking for a break of this, pull back up, retest and trade long. So we'll be adding in on that as well. So plenty of opportunity here for dollar yen. And then the last chart we're going to look at is euro pound. So this is one we sent out and we put on our social media as well. So quite a simple chart we're seeing here. We're looking at consolidation here on the daily, descending triangle, and all we're going to do, very simple, just wait for the market to run up into resistance. The simplest way I would suggest it for traders would be a limit order in here, stops above structure, target one into somewhere into these lows, and then if we actually step it out to the weekly, you know, your second target should be all the way down here. So don't go for the lows, come somewhere where buyers stepped in, and you see that's another handsome return of 5.5 to 1. So that's it from the Lifestyle Traders Club today. If you've enjoyed our content, please let us know by hitting like, share and comment below. and we look forward to seeing you later in the week with more content. Bye bye.